this, if we allow the unregulated one-denominated stablecoin, it will definitely expedite the exchange into dollar-denominated coins and undermine our capital flow management regulation. We don't know whether the critic says that the new technology in blockchain can identify the irregular transactions, do the know your customer rule kind of regulation very well, and then even identify the irregular, strange transaction very easily. But we're not so sure whether this is true. And also, there's a narrow banking issue, many other issues. So I think I have to talk to the government authorities how to handle this kind of regulations.
Andrew Bailey.
Yeah, I mean, it's an important subject. It's one of the subjects that we will have on the agenda for the FSB, no question about that. You see, the thing that I think is about stablecoins is that, and here I distinguish them from something like Bitcoin, is that they purport to be money. They purport to have the medium of exchange, function of money. And therefore, they do have to meet the test of money. And we've talked a lot about this. We've talked a lot about trust in money, about the so-called singleness of money, which is really all about them being assured to hold their nominal value. And for me, this is going to be the critical test as to what structure and design comes out of all this work that meets that critical test. Because if they don't, then I don't think we can be content with them. And if they're purporting to be money but don't actually meet the test of money.
Christine Lagarde.
I have a relatively strong view on that point, if you don't mind, because I think that we are falling prey to some confusion between money, means of payment, and payment infrastructure. And that is accelerated or emphasized as a result of the technology that are being used, and some technologies in particular. And I regard money as a public good, and ourselves as the public servants in charge of securing and protecting that public good. My fear is that blurring of the lines that I mentioned earlier are likely to lead to a privatization of money. And I don't think that this is the purpose for which we've been appointed to do the job that we have, nor is it good for this public good that is money. I think it risks undermining our capacity to conduct monetary policy, and I think it's risk weakening the sovereignty of those countries or those regions which inadvertently become subject of the use of that means of payment infrastructure / alleged money. And we should not only just consider it, but determine what our policy should be about it if we mean what we say and we protect what we have to protect. Thank you.
Chair Powell, I actually have a question. Do you fully support the recent proposal driven by the Vice Chair for Supervision, Michelle Bowman, on rolling back capital rules? Would that actually meaningfully improve liquidity in the Treasury market?
I do fully support what we in fact voted for, what we put out for comment, which is sort of putting the leverage ratio back where it should be, which is a backstop to risk-based capital. And so yes to that question. Let me say on stablecoins, if I can.
Yeah.
I do share the concerns that you hear here, but I also think it's a positive step that we don't have a regulatory framework for these now in the United States. We tried very hard in the last Congress to work with people on both sides of the aisle to create such a thing. Now it looks like we're well on the way to creating a framework, which I think is something we need. If we're going to have stablecoins, and apparently we need to have a federal and state level regulatory framework, which I think we're making progress towards having.
We only have a couple of minutes left, and so